A very warm welcome to you all. Many thanks for finding time to join us on this week's edition of Almond Finance and Wealth Report, your number one source for all the latest happenings in the world of business. My name is Margaret Mary Osibor. You're welcome. On the lineup this week, first we'll join Faith and her guest, Mr. Justice Yaw Ofori, the Ghanaian Commissioner for Insurance, for the concluding part of their discussion where they looked at the Ghanaian insurance industry and other sundry issues. Do take a listen.
Honestly, I want to see an insurance industry whereby reporting to the regulator and the regulator getting back to you, everything is done online.
On the lineup also, we will bring you highlights of the 2018 Capital Markets and Investors Forum, recently put together by Business Day Conferences at the Intercontinental Hotel, Lagos. The theme was catalyzing listings in a thriving market. The keynote speaker was Mr. Oscar Onyema, the Chief Executive Officer of the Nigerian Stock Exchange. As expected, operators in the capital markets, shareholders, associations, and other players in the organized private sector were all in attendance. The million-dollar question at the forum this year was, aside from equities and debt instruments, what other alternative asset classes could attract investors? Do take a listen.
For corporates, listing on the exchange offers benefits of one, business sustainability through the incorporation of good corporate governance and sound business practices.
Plus, of course, quick facts and all the other extras we bring you each week on this program. So sit back, relax, and enjoy the lineup. Details in just a moment. Please stay with us.
Listen up as Faith Owode brings you our Pidgin English program, Waiting Insurance They Do Serve, with different guests every week, airing live on Niger FM 102.7 at 9:45 a.m. every Wednesday.
Compulsory insurances are there in the laws, but implementation or enforcement has always been a major challenge because you don't find, in some cases, Nigeria, for example, government brings the law, so to speak, through the regulator, for example, and they are the biggest buyer of insurance products and services, and they are also the biggest debtors or those who are not willing to pay. So when it comes to the issue of enforcement of some of these compulsory insurances, how easy or how difficult has it been in the Ghana market?
Yeah, it is easy and still not easy. The rules are very good, but I think it's all about implementation. When I look at our act, we have compulsory insurance for commercial buildings in there, but it's sitting idle. So we've started, the enforcement has been there, but it depends on the degree. We believe that we have to put more fire into the enforcement mechanism and with a lot of public education.
Okay.
For the past 1 month now, we started with continuous public education, advising the public that it is mandatory for them to have commercial insurance for their commercial properties. And we have started with a task force going out, checking on them.
Okay, when you say task force, is it the task force set up by the industry or government or police or?
Yeah, it's a task force set up by the commission.
Okay.
And we do this in collaboration with the fire service and the police, and then some industry players who also sometimes want to take advantage of the task force and cash in, because sometimes when people become aware that the compulsory insurance is a must, then they probably want to buy insurance right away. So it's a teamwork.
Okay.
It's a teamwork. It's not an easy work going on foot, moving from one premise to the other, but that is the way forward. That is the way forward with a lot of public education.
Okay.
Yeah.
What about the government? Are they also keen into it by way of compliance?
Oh yeah, the government, that's why we go to the police and the fire service, they're all government employees. Because the government wants insurance penetration to go high, and they want us to do whatever we can to make a lot of our monies, cut down on the capital flight. So they are very keen. Whatever we can do to actually increase insurance penetration, we believe that they are on our side.
Okay, now, so let's talk about the issue of awareness and penetration. Oftentimes, when you talk about insurance penetration on the continent of Africa, of course, the likes of South Africa and some countries in East Africa play big. But the narratives oftentimes it's the same across West Africa. Lack of trust, lack of this, lack of that. Now, is there a role that the regulator can play to maybe eradicate some of this negative narrative that has plagued the insurance industry for so long?
Yeah, the regulator has a big role to play.
Okay.
To instill public confidence. And that can be done by being very strict and fair, open when it deals with insurance companies that try to flout the law or try to be difficult to policyholders when it comes to claim payment. I think we also have a responsibility to create public awareness so that the population knows where to go should they have any challenge with the industry. So we do public sensitization with, every year throughout the regions. Normally we communicate or we contact trade associations like the transport unions and market women, and then we educate them on the need to have insurance, and also where to go when they have a challenge with an insurance company or when they have any mistrust or challenge. And we have a complaint bureau that deals with such issues from third party, insured, and even staff. Anything related to insurance, complaint wise, we have a bureau that deals with it in the commission.
What would you say has been the major challenge for you as a regulator since you came into office?
Yeah, the main challenge is that you are dealing with human beings. And human beings will sometimes they say, lost are made
to be broken.
I'll make sure you don't get caught. And I'm a friend to everybody in the industry. I have a very good relationship with everybody. So it's always a challenge when someone does something wrong and you have to actually apply the rules. But we have said to ourselves that we know that decisions that we take, sometimes we step on people's toes. But so far as we know, it's in the interest of the group or the majority. They have no option but to implement it to protect the industry as well as the policyholders. So that is the challenge, but it has to be done.
Okay, so sometimes I think it's the same story you hear from regulators. They are dealing with friends and all of that. But in the process, sometimes of trying to make human beings do the right thing. As you said, you step on toes, and then you begin to hear words like, oh, we are over-regulated. The regulator is breathing down our neck. They want to kill us. They want to destroy us. They want to eliminate the business of insurance and all of that. How do you deal with some of those cries from the regulated entities?
Honestly, I don't get worried about it because that is a way of getting away with the wrong thing. Sometimes people will complain that we are being over-regulated, but always what we do is that we always quote the act. You operate within a certain market and there are rules and regulations. So everything that we do, we actually refer to the act, or we quote, or sometimes we even add a photocopy to it, so that you know that we are just doing our job. So we don't get that. We don't get bothered by that. If you get bothered, you can't be a policeman.
Okay, finally, sir, where do you see the Ghanaian insurance industry 10 years from now?
10 years from now, I believe, not even before 10 years, maybe middle of this year going, we should see a system that is more digitized. Honestly, I want to see an insurance industry whereby reporting to the regulator and the regulator getting back to everything is done online. As we speak, we have the reporting from the quarterly reports from the industry comes to us electronically through a system that we are using called Visor.
Okay.
Yeah. So right now we want to add the web application to it so that the accounts relations officer here and the contacts within the companies can always communicate. We don't need to print invoices to you, hard copy. All should be sent electronically. Payment will be done electronically. That is how we think we should be going. Because it's been done elsewhere. It means it can be done. The applications that we have, the software that we have can do almost everything that we need. It's about making people know that they have to go digital. That is to make life easy. And with digitalization, it also reduces fraud and leakages. We are looking at a system whereby from next year, and we're hoping that by the middle of this year, we have a central database for all our motor vehicles, so that all underwriting will come in, and then we'll also have claims, so that we'll start building a data for our industry. We don't have any data.
It's a major challenge in the industry.
Yeah, but I think it can be done. So this is going to be a legacy for our industry.
But Commissioner, oftentimes when you talk about the issue of technology and even data, you hear a lot of things that, oh, it's capital intensive. We don't have that kind of money to invest in generating data or research and doing all that. So how do you go around that?
In fact, I don't think it's capital intensive as people say.
Okay.
Because we have a lot of systems that we are using that can do so much. You go to different departments, they have systems that they're not even using it. When I was on the technical side, there was a software, no manager wanted to use it. It was just the junior level. The managers wanted to actually always do things by paper. So there are systems already available. We have already bought into systems. There are systems that can be designed by our IT. Over here, we have a claims software, which was designed internally by our IT manager. So it means that things can be done. It doesn't need to be the sophisticated one, but you start basic and you build upon it. I think the challenge is that the IT man has the skills to build softwares for us, but they're not insurance people. And insurance people who know what they need also don't want to use IT. So if they could actually advise the IT on what they need, the IT people will always be ready to design something for them. So it's not as complex as, within a department, you can have a small software to operate within an intranet to make life easy. But these things are not being done. So I know if you want to go very high, you are going into different realms, but at a simplified level, we should be able to be doing so many things. Yeah.
Okay.
It's not complicated.
As we
it's
think.
a willpower. Yeah.
All right. On that note, I'd like to say thank you so very much for finding time to talk to us on the program.
Thank you very much too.
Thank you very much.
Thanks for the time.
All right, welcome back. Moving on now, we bring you highlights of the 2018 Capital Markets and Investors Forum, which took place recently at the Intercontinental Hotel here in Lagos. The consensus at the forum this year was whether in equities or debt markets, attracting more listings is critical to strengthening recent growth in the Nigerian capital market. Happy viewing.
Listen up as Faith Awori brings you our Pidgin English program, Waiting Insurance They Do Serve, with different guests every week, airing live on Naija FM 102.7 at 9:45 a.m. every Wednesday.
Nigeria made history in 2017 by joining the League of Argentina, Turkey, and Hong Kong stock markets, which outperformed other global equities in terms of returns. Last year was particularly great for equity investors globally. In Nigeria, over 4.5 trillion naira was gained by stock investors last year. Good as that sound, the rising tide did not lift all boats around new listings. Business Day Conference recently put together its 2018 Capital Markets and Investment Forum at the Intercontinental Hotel, Victoria Island. The theme was Catalyzing Listings in a Thriving Market. Keynote speaker was Ms. Oscar Oyema, Chief Executive Officer, Nigerian Stock Exchange, while guest of honor was the Director General, Debt Management Office, Ms. Patience Oniha. Delivering his address, the keynote speaker, Ms. Oyema, said that to better serve the listed companies, the Nigerian Stock Exchange has embarked on a series of initiatives in line with global best practices.
To better serve listed companies and improve liquidity flows, we made strategic changes to our market and the NSE listing boards with the creation of the Premium Board, the Main Board, and the Growth Boards, respectively. By streamlining our market along industry and sectorial lines, the NSE has removed barriers to capital flows and has conformed to more widely accepted global standards such as GICS and NIACS. Globally, small and medium-sized enterprises, SMEs, form the bulk of companies and employers in an economy. According to the World Bank, SMEs provide at least 45% of the jobs and 33% of the GDP in emerging economies alone. However, SMEs, the engine of the real economy, continually face significant credit constraints which limit their ability to scale. To bridge this deficiency, the NSE maintains an alternative securities market, ASEM, a tailored market segment which provides high-growth SMEs the opportunity to access capital equity finance at lower listing fees and requirements.
In a goodwill message, the guest of honor, Ms. Oniha, said that for the first time, all the treasury bills issued in December was redeemed by the DMO.
Our domestic borrowing is approved in the course of the budget, okay, but with the external, in addition to the budget, we go back to the National Assembly for a resolution. Okay, so last year we got approvals, all those approvals I described, for $3 billion, specifically to refinance domestic debt. So we borrowed normally for the budget, but also had $3 billion to refinance domestic debt. So we started, in November we raised $500 million out of that through Eurobonds. And in December, I should say for the first time, and we were extremely delighted to be able to do that, we redeemed all the treasury bills that matured in December 2017. That was 198 billion naira. And the effect exactly, the CEO of the NSE talked about it, but that's where it's coming from. Okay, so rates dropped straight to between 13 and 14% from that one action in December. Okay, so what that simple act meant is that we achieved two objectives. Money has been released to investors, it is in the banking sector, and they can make those monies available to other issuers or other borrowers for those who are not issuing bonds. It also meant that the rates dropped, so the cost of borrowing reduced. Again, we were beneficiaries, but it's also good for the private sector.
Amid all these positives, the dearth of new listings, whether in equities and debts or derivatives as well as other alternative asset classes, is increasingly attracting questions from many schools of thoughts. The panel discussion focused on the role of alternative asset classes in deepening the markets. Panelists were Mr. Denny Falade, Managing Director, Crusader Sterling Pensions Limited, Mr. Osaro Egobamian, San, Managing Partner, Petstone and Grace, Mr. Babatunde Obaniyi, Managing Director, Investment Banking, United Capital, Mr. Uche Val Obi, San, Managing Partner, Alliance Law Firm, Mr. Kennedy Ikibo, CFA, Vice President, Zenith Capital Limited, and Mr. Dekunle Adebiyi, Vice President, MBO Capital. Moderator was Alice Tomdio, Senior Manager, Capital Market Services, PwC. Speaking during the panel discussion, Mr. Falade said that there is need for greater collaborations between capital markets operators and pension fund managers.
What you get depends on the state of the capital market when you retire and whatever is the balance in the account. So there is need for greater collaboration between capital market or financial market operators and the pension fund managers. Because ultimately what people are going to retire to depend on their balances, which is a function of the various asset classes that have been invested in. So daily liquidity requirement is a critical function of the discipline. On a daily basis, benefits are paid. So the assets must be fairly liquid. One of the problems we have with REITs, for instance, is that it's simply liquid, based on the ones that have come into the market, simply liquid. There's also a daily valuation requirement because all assets in the portfolio are marked to market on a daily basis. All right, which is also where we have challenges with private equity. And one of the things I've said to some of my friends is that we need to find a way to now start listing private equities in this market, just like it's done elsewhere, so that as a limited partner, I don't need to wait for 7 years or 5 years to get out.
The second panel focused on some of the burning issues such as the cost of listing on the Nigerian Stock Exchange, confidence in the market, and a host of others. Panelists were Mr. Tony Ibiziako from the Nigerian Stock Exchange, Aruna Jalo Waziri, MD and CEO Central Securities Clearing System, Mr. Bola Onodele Koko, MD and CEO FMDQ OTC Securities, Mr. Bola Ajomale, MD and CEO NASD OTC, and Mr. Bayo Olugbemi, MD and CEO First Registrars. Moderator of the session was Mr. Frank Aigogo, publisher, Business Day newspaper. In his submission during the panel discussion, Mr. Onodele said that the Nigerian investors are more sensitive than foreign investors.
People that have capital choose where they put their money. It's not only foreign investors that are sensitive. Nigerian investors are sensitive. People work hard, build capital. You're not going to destroy it by exchange rate moving from 150 to 380 or 500. I mean, you're ruining their future. So I think Nigerian investors are probably more sensitive. Well, maybe you don't see it because it's not in the official market. They take their money out through the alternative market and invest elsewhere. So we have to give the market the right foreign exchange. So some of the things Jalo talked about, institution. What is the nerve center of an economy? The commerce is the nerve center of everything. You can't stifle that commerce with foreign exchange at any time. We have to understand the fundamentals of financial markets, how markets work. We can't rewrite history or how markets work. We have to be ready. If we're going to play and have a capital market, we need to understand how markets work. If crude oil goes up, you have appreciation of your currency. If it comes down, you should expect things to change. If you don't want that, you build over 5, 10, 20 years why those shocks will be reduced. There's so many things to do to have, as Osama said earlier, a coordinated way of running things. If not, as Jalo said, a new regulator comes, it does its thing, a new man comes, it does. That's not how to retain capital. We've been to other countries where we were told foreign portfolio investors had been in the country for 18 years. There's something they're doing to retain the capital. If you treat capital badly, capital will leave.
Given the high-level deliberations at the forum, participants had questions. Whether in equities or debt markets, attracting more listings is critical to strengthening recent growth in the markets. Questions are now around how regulators can attract more companies, exchange-traded funds, debt securities and derivatives to list on the exchanges. Many believe that to attract new listings, the cost of raising capital must be properly structured.
And that is our time on the program this week. Many thanks for being a part of it. Do keep a date with us next week, same time, same station, for a fresh package. In the meantime, we are live and we are social, so connect with us on all our social media platforms. You can also join us live every Wednesday by 9:45 a.m. on Niger FM 102.7 for our Pidgin English program, Waiting Insurance They Do Serve. Also tell your folks in the East to tune in to Odenigbo 99.1 FM Obusi, Anambra State for that same program, Waiting Insurance They Do Serve. Once again, my name is Margaret Mary Osiobor. Until next week, from the entire crew, stay blessed. Bye-bye.